Fundamental characteristics of accounting information. 1. Relevance. 2. Reliability. Comprehensive income. NI plus OCI. Unrealized G. AFS securities. OCI not on income statement. Unusual, frequent items. No separate disclosures. Aspects of relevance. Predictive value, confirmatory value, materiality. Aspects of reliability. Comparability, verifiability, timeliness, understandability. Single source of US GAAP amended through FASB Accounting Standards Codification Accounting Standards Updates. All U.S. public companies required to follow US GAAP. Accounting Standards Update issued only after majority vote by members of FASB. Replacement cost. Amount of cash or cash equivalent. Continued versus discontinued income. Predicted value. Royalties paid. Reported as expense in the period incurred. Disposal on component of a business. Discontinued. Overdraft reported as current liability. Cash account for payment into a bond sinking fund. Non-current asset. Non-current asset. Cash realized time beyond operating cycle or 1 year. Deposits received from customer. Liabilities. Service contracts sold. Deferred revenue increases, but service revenue doesn't increase until services are performed. G. When contract is performed. None. Journal entries. Sales of service contract. Cash received. Dr. Cash 15,000 CR. Unearned sales revenue 15,000. Product transferred. Dr. Unearned sales revenue 15,000 CR. Sales revenue 15,000. Dr. COGS 9,000 CR. Inventory 9,000. Revenue recognition process. I*1. Identify contract. 2. Separate performance obligations. 3. Transaction price expected to be entitled to. 4. Allocate to separate performance obligations. 5. Recognize revenue based on either a point in time or over time. Bill and hold. Recognize all revenue now. 0 unearned. Discount. Allocated. Consignment. No unearned revenue. Didn't sell anything. Service contracts. Deferred revenue equals unearned liability. Service revenue equals earned income. Milestones achieved. Output method to recognize revenue. Incremental costs. Can recover costs. Would not have been incurred if didn't enter the contract. Recognized as an asset. Revenue recognition. 1. Principal. 2. Agent. 1. Gross consideration entity expects to receive. 2. Fee or commission performing the agent function. Forward or call option. Repurchase price greater than original selling price. Financing arrangement. Forward or call option financing arrangement. G. Dr. Cash 350,000 CR. Financial liability 350,000. Recognize interest EXP N 385,000-350,000. Dr. Interest EXP 35,000 CR. Financial liability 35,000. Option lapses unexercised. Derecognize liability and record sale. Dr. Financial liability 385,000 CR. Revenue 385,000. If you get extended warranty. Separate performance obligation. Longer the coverage period, higher likelihood it's a performance obligation. Forward. Obligation to repurchase the asset. Call option. Right to repurchase the asset. Forward or call option repurchase price less than original SP. Lease. Forward or call option repurchase price greater than / original SP. Financing arrangement. Entity recognizes asset, financial liability for any consideration received from customer. Recognize interest expense equals consideration received from customer. Amount of consideration to be paid by customer. Put option. Obligation to repurchase asset at customer's request. Put option. Repurchase price less than original SP. 1. Lease if customer has significant economic incentive to exercise the right. Repurchase price greater than expected MV. 2. Sale with right of return. Put option. RP price greater than / original SP. 1. Financing arrangement. 2. Sale with right of return if RP price is less than expected MV or asset and customer doesn't have significant economic incentive to exercise the right. Refund liabilities and right to return. 1. Keep revenue for transferred products. 2. Give back a refund liability. 3. Get back an asset related to the subsequent recovery of products when refund liability is settled. Percentage of completion. GAAP and IFRS. Percentage of completion. Construction in progress. CIP. Construction costs and estimated GP earn progress billings. Billings on construction contra inventory. Percentage of completion. Current asset accounts. 1. Due on accounts. 2. CIP. Costs and estimated earnings of uncompleted contracts in excess of progress billings. Percentage of completion. Current liabilities. Progress billings in excess of cost plus estimated earnings on uncompleted contracts. Percentage of completion. GP or loss recognized each period. 1. GP of completed contract equals contract price estimated total cost. 2% of completion total costs to date total estimated cost of contract. 3. Profit to date equals 1x24. GP earned for the current year equals PTD. PTD beginning of the period equals current YTD GP. Completed contract or percentage of completion estimated loss on total contract. Loss is recognized immediately in year discovered. Reverse previous profit. Recognize immediately. Percentage becomes 100%. Percent of job earned. Cost incurred total expected cost equals work done total expected work. Completed contract. US GAAP only. IFRS doesn't permit. Completed contract appropriate when. Difficult to estimate. Many contracts short duration. Completed contract revenue and GP recognized. When contract is completed unless loss is recognized. Completed contract current asset accounts. 1. Due on AR. 2. Cost of uncompleted contracts in excess of progress billings. Construction in progress. Completed contract current liabilities. 1. Progress billings on uncompleted contracts in excess of cost. Completed contract at completion. GP or loss equals. Contract price total costs. Progress billings versus accumulated costs plus excess earnings. Cumulative costs incurred. GP recognized. Consignor consignee inventory. Consignor maintains on the books. Consignee revenue equals commission. Recognize refund liability. If receives or expects to receive consideration for a customer and anticipates having to refund a portion or all of that consideration, can book revenue at the time of the sale, can't reasonably estimate returns. Once 12-month period passes, then recognize revenue. NRV. FE costs to sell. Change in estimate. Changes in accounting principle. Change in accounting from one accounting principle to another acceptable accounting principle. GAAP to GAAP. Non-GAAP to GAAP is an error. No change in principle may only be changed if required by GAAP or the alternative principle is preferable and more fairly presents the information. Cumulative effect. Change in accounting principle. 1. If non-comparative FS presented. 2. If comparative FS presented. Reporting changes in accounting principle. Recognized by adjusting beginning R in the earliest period presented for cumulative effect of the change, and if prior period financial statements are presented, they should be restated. Changes in accounting entity 1, 2. Restatement. Error correction. Errors if comparative FS presented and FS for the year with the error are presented. Merely correct error in prior FS. Error if comparative FS presented and FS for year with errors not presented. Adjust opening R if earliest year presented. Errors comparative FS not presented. Error correction reported as adjustment to opening balance of RE. Unrealized GL in trading securities. Included in net income. Goodwill recorded at HC. Understatement of ending inventory. Overstatement COGS. Understatement NI. Revenue recognition refundable. Point in time. Revenue recognition non-refundable. Overtime. Revenue recognition overtime. 2 methods. 1. Output method. 2. Input method. Output method. Units produced, delivered, time elapsed, milestones achieved, surveys of performance completed to date, appraisal of results achieved. Input method. Costs incurred relative to total expected costs, resources consumed, labor hours expended, time elapsed. Unconditional right equals conditional equals. 1. Receivable. 2. Contract asset. Components of OCI. Q for 1. Pension adjustment. 2. Unrealized GL on AFS debt securities. 3. Foreign currency items. 4. Effective portion of cash flow hedges. Interest rate contracts. Commodity contracts. 5. Revaluation surplus. No revaluation loss. GL on ineffective portion of cash flow hedges. Include in current income. End of each accounting period, all components of comprehensive income. Close to BSNI, close to RI, OCI, close to OCI. Adjusting journal entries never involve. Cash account. Inventory written off. Change in estimate. Record unearned revenue. Dr. Cash CR unearned revenue. Adjusting entry once revenue earned. Dr. Unearned revenue CR revenue. Prepaid expenses 1. Record 2. Adjusting. 1. Dr. Prepaid expense CR. Cash 2. Dr. expense CR. Prepaid expressway. Recording inventory perpetual. Dr. Inventory CR. A P. Recording inventory periodic. Dr. Purchases CR. A P. Accrued revenue journal entry. Dr. ARCR. Revenue. Accrued expense G. Dr. expense CR. Accrued liability. Advances effect. Cash flow but are not an accrual basis expense. Freight out. Selling expense. Construction contracts G. 1. Record cost incurred. 2. Record billings. 3. Record payments received. 4. Record revenue cost during construction period. 1. Dr. CIPCR cash. This number is the added amount once going to the next year. 2. Dr. Contracts Receivable CR progress billings. 3. Dr. Cash CR contracts receivable. This number is the added amount once going to the next year. 4. Dr. Construction EXP Dr. CIPCR revenue. Percent of completion balance sheet. CIP progress billings equals net CIP BS end of year 2 CIP year 1 plus CIP year 2 progress billings just for year 2. Amounts shown on BS at end of contract. 0. All accounts closed. Accrued interest revenue. Dr. Interest receivable CR interest income. Completed contract GAAP BS end of year 1. CIP only costs incurred to date progress billings. Completed contracts final journal entries. Dr. Progress billings CR revenue. Dr. Construction EXP CR CIP. When specific account is written off. Dr. Allowance for doubtful accounts CR are granted bankruptcy debt been discharged. Actuarial gain IFRS. Remain in OCI without being reclassified to the IS. Reimbursement provision. Change in accounting estimate. Dr. Provision expense CR provision liability. Are overstated record correction of error in prior periods. Dr. RE 164,500. Dr. Income taxes payable CR R 235,000. Correction of errors of prior periods. Adjustment to beginning RE not income. Cumulative effect of change in accounting principle. Determined as of the beginning of year of change if comparative FS not presented. BS item changed based on balances at end of last year. Prior method used. If is amounts, look at all past years in the aggregate. Operating leases make a payment. Dr. Rent expense CR cash. Notes to FS. Summary of significant accounting policies don't need specific numbers. Immaterial items not disclosed. IFRS requires disclosures of judgments. US GAAP doesn't. Debt needs to be shown cash outflows for 5 years. Going concern versus liquidation. IFRS no guidance on liquidation accounting. Subsequent events. 1. Recognized. 2. Non-recognized. 1. Record G and disclose. 2. Non-recognized equals disclosure only. Revised FS equals reissued FS. Gain contingency. Don't record until they actually occur. Deductible clause. The possible loss. Subsequent event evaluation period for a filer for a non-filer. 1. Through dates FS are issued. 2. Through date FS are available to be issued. Disclose date through which subsequent events evaluated. 1. Filers not required to disclosure. 2. Non-filers are required to disclose. FE doesn't include but can include transaction costs, transportation costs. FE principal market. Most volume. FV highest and best use non-financial. PP. FV valuation doesn't apply to share-based compensation or leases. Interest in VI if required to consolidate. Investment in sub if required to consolidate. FV valuation techniques. 1. Market. 2. Income. DCF. 3. Cost. Current replacement cost. Projected cash flows. Unobservable input. 20-year bonds valued at. Amortized cost. Land measured at. Historical cost, not a 1, 2, or 3 input. Goodwill. FV Level 3. Intercompany transactions. 1. Consolidation. 2. Segment reporting. 1. Eliminate. 2. Don't eliminate. Segment profit or loss. Revenues, directly traceable costs, reasonably allocated costs equals operating profit or loss EBIT. Segment reporting liability disclosures. Only under IFRS. Segment cash flow. Not reported under IFRS. 75% reporting sufficiency. 10%. Sales to external customers, both internal and external customers. 11K. Employee benefit plans. 20F. Non-US 10K annual report. 40F. Canadian 10K annual report. 6K. Semi-annual foreign private unaudited. 8K. Major events. Form 3, 4, 5. 10% owners. 10Q. Quarterly unaudited. 10K. Annual audited. XBRL. Tag machine readable code taxonomy specific tags used. Regulation SX. Filing requirements. Quarterly amount of gain. Entire amount should be reported in the period incurred. OCBOA. Cash basis, modified cash basis, tax basis, regulatory basis. Cash basis revenue to accrual basis revenue. Cash basis revenue plus ending AR, beginning AR, ending unearned revenue plus beginning unearned revenue equals accrual basis revenue. Cash paid for purchases converted to COGS. Cash paid for purchase plus ending AP, beginning AP, ending inventory plus beginning inventory equals COGS. Cash paid for operating expenses greater than accrual. Cash paid for operating expense plus ending accrued liabilities, beginning accrued liabilities, ending prepaid expense plus beginning prepaid expense equals accrual basis operating expenses. Liquidity ratios. Working capital current ratio, asset rest ratio, cash ratio. Working capital. Current assets, current liabilities. Current ratio. Current assets, current liabilities. Asset test ratio. / current liabilities. Cash ratio. / current liabilities. Activity ratios. AR turnover in days, INV turnover in days, operating cycle, working capital turnover, TAT. AR turnover days. Net credit sales average net receivables 365/AR turnover. Inventory turnover days. COGS average inventory 365/inventory turnover. Operating cycle. Inventory turnover in days plus AR turnover in days. Working capital turnover. Sales average working capital. TAT. Net sales average total assets. Net profit margin. NI net sales. ROA. NI average total assets. DuPont ROA. Net profit margin ex-TAT. Return on common equity / average common equity. Coverage ratios 1. Debt equity 2. Debt to assets 3 times interest earned 4. Operating cash flow to total debt 1. Total liabilities common stockholders equity 2. Total liabilities total assets 3. EBIT interest 4. Operating cash flow total debt. Formation of partnership tangible assets. Recorded at FMV on date of investment. Existing partnership interest. No journal entry. Factoring receivables discounting receivables. AR to cash or LNR to cash written. FOB shipping point. Freight in. FOB destination. Freight out. Non-conforming goods. Seller's inventory. Sales with right of return, amount of goods likely to be returned can't be estimated. Include goods in seller's inventory. Sales with right of return, amount of goods likely to be returned can be estimated. Transaction recorded as a sale with an allowance for estimated returns recorded. Consignor recognized revenue when goods sold from consignee to third party. Sales with mandatory buyback. Financing arrangement. Seller has requirement to repurchase goods from buyer. Seller include goods in inventory even though title passed to buyer. Inventory Rev Rec. 1. Sales price fixed at date of sale. 2. Buyer assumes all risk of loss. 3. Buyer has paid some form of consideration. 4. Product sold substantially complete. 5. Amount of future returns can be reasonably estimated. Inventory valuation GAAP general rule. Inventory stated at cost where evidence indicates cost will be recovered with normal profit on sale in ordinary course of business. No loss recognized even though replacement or reproduction costs lower include freight in. LIFO IFRS doesn't permit use. Departure from inventory cost basis. Precious metals and farm products NRV equals selling price costs of disposal. Ordinary course of business utility of goods no longer as great as cost. Departure from cost basis of measuring inventory lower of cost or market lower of cost or NRV. US GAAP write-down of inventory. Usually COGS amount material loss identified separately in is no reversal of write-downs. US GAAP lower of cost and NRV method used for IFRS. When using FIFO or weighted average all inventory valued using this method. Lower of cost or market. LIFO or retail. Market value GAAP. Middle value of an inventory item's replacement cost, market ceiling and market floor. Market ceiling. NRV, net selling price, costs to complete and dispose. Market floor. Market ceiling, normal profit margin NRV, profit. When market lower than cost, G to record write-down to separate account. Dr. Inventory loss due to decline in MV Creek inventory. Periodic inventory 1G time of sale COGS equals. Beginning inventory plus purchases equals COGS. Ending inventory equals COGS. Perpetual inventory system. 2G time of sale. No purchases. Immediately debit inventory. Actual COGS determined and recorded with each sale. Periodic versus perpetual sales. Periodic Dr. Cash CR sales perpetual Dr. Cash CR sales Dr. COGS CR inventory. Periodic versus perpetual purchases of inventory. Doctor purchases CR cash, doctor inventory CR cash. Periods of rising prices. FIFO highest ending inventory, lowest COGS, highest NI. Weighted average method. Periodic homogeneous goods weighted average equals COGS units available for sale. Moving average. Perpetual system. Periods of rising prices, LIFO. Lowest ending inventory, highest COGS, lowest NI. FIFO periodic versus perpetual. Same. LIFO periodic versus perpetual. Not the same. In period of rising prices. FIFO highest ending inventory, lowest COGS. LIFO lowest ending inventory, highest COGS. Average method falls between LIFO and FIFO. Balances moving average results in higher ending inventory and lower COGS than WA method. Dollar value LIFO internally computed price index. Ending inventory at current year cost, ending inventory at base year cost. To compute LIFO, layer added in current year at dollar value LIFO. LIFO layer at base year cost x internally generated price index. Gross profit method. Quarterly plus periodic. Loss on purchase commitments and G. Price of purchase commitment, market price at year end equals loss on purchase commitments. Doctor estimated loss on purchase commitment CR estimated liability on purchase commitment. FOB destination. Packaging, shipping, and handling costs are costs of the seller. Freight out is a selling expense not capitalizable as inventory. Add freight into COGS. Donated fixed assets. Doctor fixed assets CR gain on non-reciprocal transfer. Valuation of fixed assets under IFRS. 1. Cost. 2. Revaluation. Cost model. Historical cost, accumulated debt, impairment. Revaluation model carrying value. FV at revaluation date, subsequent accumulated depreciation, subsequent impairment. If revalued FA become impaired. Impairment recorded by first reducing any revaluation surplus to zero, further impairment losses on the IS. Revaluation losses. Initial reported on IS unless loss reverses a previously recognized revaluation gain would then be recognized in OCI and reduces revaluation surplus in EOSHI. Initial revaluation gains. OCI. If revaluation gain reverses previously recognized revaluation loss. Reported on IS. Land purchased for purpose of constructing a building, land costs. Purchase price, brokers commission, title and recording fees, legal fees, draining of swamps, clearing of brush, entry site development, existing obligations assumed by buyer, costs of raising LESS, proceeds from sale of existing buildings, standing timber, etc. Land improvements are depreciable. When preparing land for construction of building. Land cost, filling in hole or leveling building cost, digging a hole for the foundation. Cost of plant or buildings. Purchase price plus all repair charges neglected by the previous owner plus alterations and improvements plus architect's fees plus possible addition of construction period interest. Cost of equipment. Invoice price, cash discounts and other discounts plus freight in plus installation charges plus sales and federal excise taxes plus possible addition of construction period interest. Improvements and replacements. Capitalize. Replacements if carrying value of old asset is known. Remove it. Recognize GL, capitalize cost of improvement replacement to asset account. Replacements if carrying value of old asset unknown and asset's life is extended. Doctor accumulated debt CR, cash AP. Ordinary repairs, extraordinary repairs. 1. Expensed as repair and maintenance. 2. Capitalized. Usefulness utility of asset is increased. Improvement replace. Capitalize cost of improvement replacement to asset account. Extraordinary repair increase life. Reduce accumulated depreciation. Extraordinary repair increase usefulness. Capitalize. Additions increase quantity. Capitalize. Capitalized interest rules. 1. Only capitalize interest on money actually spent, not on total amount borrowed. 2. Amount of capitalized interest is lower of actual interest cost incurred computed capitalized interest. Capitalizing interest stops during, continues during. Intentional delays in construction, ordinary construction delays. Interest only capitalized for discrete manufacturing activity. Interest incurred to acquire land should be expense when incurred. Architect's fees. Building. Sewage system. Improvement capitalize. Construction period interest capitalized based on weighted average of accumulated construction expenditures. Component depreciation US GAAP IFRS. Permitted but rarely used. IFRS requires. When a group or individual composite asset is sold or retired, no GL on is GL absorbed in accumulated depreciation account. AD is debited or credited for difference between original cost and cash received. Composite depreciation. Averaging economic lives of a number of property units and depreciating entire class of assets over a single life. Average composite life. Sum of depreciable costs of each asset divided by sum of annual depreciation expense each asset. G. Disposal of group or composite asset. Dr. Cash. Dr. Accumulated depreciation CR. Asset A. Sum of the year's digits then depreciation expense. S equals /2 greater than N. Estimated useful life depreciation expense equals X. Units of production depreciation. Estimated units or hours equals rate per unit or hour. Rate per unit or hour X number of units produced equals depreciation expense. Double declining balance DEP EXP. 2x 1 per Newton X. Sale of individual asset during its useful life G. Dr. Cash. Dr. Accum DEP CR. Sold asset at cost CR. Dr. Difference is GL. Write-off fully depreciated asset G. Dr. Accum DEP CR. Old asset at full cost. Total or permanent impairment G. Dr. Accumulated depreciation per records. Dr. Loss due to impairment CR. Asset at full cost. Cost depletion. Percentage depletion. 1. GAAP. Current estimated recoverable units unrecovered cost equals cost depletion rate X units produced. 2. Not GAAP. Tax only based on percentage of sales limited to 50% of NI from depletion property computed before percentage depletion allowance. Unit depletion rate. Depletion expense. 1. Depletion base / estimated recoverable units. Look for distractor. Only use recoverable units. 2. Unit depletion rate X number of units extracted. Depletion base. Cost to purchase property plus development cost to prepare land for extraction plus any estimated restoration costs less residual value of land after resources are extracted. DDB versus SID. DDB starts at a higher level than SID and declines rapidly to depreciation base but not at a constant rate. SID declines at a constant rate. Non-monetary asset exchange having commercial substance. FCF changes. GL recognized fair value approach. Economic position of the two parties change because of the exchange gram per liter equals FV, BV of OLD asset given up. Commercial substance exchanges. FV of assets given up is assumed to equals FV of assets received including any cash given or received in the transaction. For exchange basis and G. Basis FV of asset given up plus cash paid equals building cost Dr. building basis Dr. accumulated debt asset given up CR cost of asset given up CR gain on disposal of old asset CR cash paid. IFRS non-monetary exchanges. Dissimilar assets GL recognized similar no gain recognized. Exchanges lacking commercial substance. Lacks commercial substance, no boot received. Basis of acquired asset equals basis of the old asset, also assets FV, deferred gain. Non-monetary asset involuntarily converted to cash. Entire gain or loss recognized selling price, insurance proceeds. Purchased intangible assets. Capitalize at cost. Internally developed intangibles. Expense, except legal fees, other costs, successful defense of the asset registration or consulting fees, design costs, other direct costs of security assets. Amortize intangibles with finite lives. Do not amortize assets with indefinite lives or goodwill. Patent amortized. Shorter of estimated life or remaining legal life. Revaluation model carrying value. FV on revaluation date, subsequent amortization, subsequent impairment. Revaluation loss. Reported on is, unless revaluation loss that reverse previously recognized gain recognized in OCI and reduces revaluation surplus in EOSHI. Revaluation gains reported on is, to extent they reverse a previously recognized revaluation loss. Impairment. Revalued intangible assets become impaired. Impairment recorded by first reducing revaluation surplus in equity to zero with further impairment losses on is. Initial franchise fees. PV of amount paid or to be paid by a franchisee is recorded as an intangible asset on the BS and amortized over expected life of the franchise. Continuing franchise fees. Franchisee equals expense as incurred. Franchisor equals revenue. Startup cost. Expense. Exceptions to expensing R&D. 1. Materials, equipment, or facilities with alternative future uses. 2. R&D costs undertaken on behalf of others under a contractual arrangement. Marketing research. Not R&D expense immediately as operating expense. IFRS research costs must be expensed, but development costs may be capitalized if certain criteria are met. Computer software development costs. Amortization of capitalized software costs. Greater if % of rev equals total capitalized amount x straight line equals total capitalized amount estimated economic life. Costs incurred to actually produce product. Inventory cost of goods sold. Capitalized software costs reported at lower of cost or market equals NRV. Computer software developed internally or obtained only for internal use. similar to rules for software to be sold, except capitalized costs only amortized on a SL basis. Company changes plan and decides to sell software. Use cost recovery system greater than recognize revenue. Internal development of goodwill can't be capitalized, expensed. Software maintenance costs, software modification costs. 1. Expense. 2. Capitalized and amortized. Computer software amortization begins once product is released for sale. Impairment. Intangible assets with finite lives. Two-step impairment test. 1. Recoverability test. If carrying value of asset greater than sum of undiscounted cash flows, go to step 2. 2. Asset is impaired. Loss equals carrying value of asset FE. Impairment. Intangible assets with indefinite lives. One-step impairment test. Compare FE to carrying amount. If FE less than CV, impairment loss recognized equals to difference. Qualitative test for impairment. Indefinite life intangibles only. Step 2. There is an impairment. Assets held for use. FE. Carrying value equals impairment loss. 1. Write asset down. 2. Depreciate new cost. 3. Restoration not permitted. Step 2. There is an impairment. Assets held for disposal. FE. CV equals impairment loss plus cost of disposal equals total impairment loss. 1. Write asset down. 2. No depreciation taken. 3. Restoration permitted. Finite life PP&E same as. Finite life intangibles impairments. Restoration of previously recognized impairment losses. Prohibited under US GAAP unless the asset is held for disposal. Allowed under IFRS. IFRS impairment losses. Don't use step 0 or 1, only use step 2. G to record impairment loss on equipment. Dr. Impairment loss. CR. Accumulated depreciation. Long-lived asset impaired if CV of asset greater than FV and if carrying amount not recoverable. IFRS impairment loss. Recoverable amount. CV. Recoverable amount greater of FV. Costs to sell and assets value in use. Avoidable interest. Capitalized interest costs determined by applying an interest rate to the average amount of accumulated expenditures for qualifying asset during the period. Interest rate on borrowings. Interest rate paid on borrowings specifically for asset construction during a period should be used to determine amount of interest cost to be capitalized for that period. Interest rate on excess expenditures. If average accumulated expenditures outstanding greater than amount of related specific new borrowing, interest cost should be computed on the excess. Interest used on the excess is weighted average interest rate for other borrowings of the company. Total capitalized interest costs may not exceed total interest costs actually incurred by an entity. Amount of capitalized interest. Lower of 1. Actual interest cost incurred. 2. Computed capitalized interest. Equipment currently used for R&D. Depreciation expense. Dr. R&D expense. CR. Accumulated depreciation. Goodwill impairment. CV. Identifiable net assets greater than FV. Potential for impairment. Goodwill loss measured by comparing implied FV or goodwill to CV of goodwill. R&D costs for computer hardware. Expensed under GAAP. Never capitalized. IFRS allows capitalization once technological feasibility established but costs expensed before. Computer software. GAAP expense all R&D prior to technological feasibility. Development costs post-technological feasibility may be capitalized. IFRS doesn't have specific accounting but similar to other intangible assets. Goods stored in a public warehouse. Included in inventory total. Shipping costs between warehouses. Inventory cost. Software is an intangible asset. Amortize. Freight in and normal spoilage. Include in inventory costs. Receive bad check paid in next year. Dr. ARCR cash. Income tax payable equals total income tax expense, total estimated tax payments. Bank balance corrections plus deposits in transit, outstanding checks, possibly errors. Book balance corrections. Service charges plus bank collections, NSF plus interest income. Negative balance in bank account. Overdraft reported on BS as liability. If extraordinary repair increases the life of the asset. Reduce accumulated depreciation. If extraordinary repair increases utility of the asset. Capitalized a fixed asset account. Change in credit rating, financial liabilities 1. Note bond 2. Derivative liability. 1. OCI 2 is redeemable preferred stock. Debt security. 2 ways to account for debt securities. 1. Trading 2. AFS 3. HTM. Trading securities. Valued at FV. All GL on is current asset. Buy-sell cash flow from operations. AFS debt securities. Valued at FV. Buy-sell cash flow from investing. Realized GL is unrealized GL, OCI. Held to maturity. CFI. Valued at amortized cost. Corporation must have intent and ability to hold securities to maturity reported as current or non-current assets. Unrealized GL. Trading securities G to record loss in NI. Included in earnings. Dr. Unrealized loss on trading securities CR. Valuation account. Unrealized GL. AFS debt securities G to record unrealized loss in OCI. Dr. Unrealized loss on AFS securities CR. Valuation account. Realized GL. AFS. Sale or impaired. Income from investments in debt securities, trading or AFS. Dr. Cash CR. Interest income recorded on the is. Permanently impaired debt securities. 1. Trading NA. Loss already on is 2. AFS. Unrealized loss now on is 3. HTM. Mark to FMV and loss on is. Sale of trading security. Dr. Cash CR. Trading security Creek. Realized gain on trading security SP. CV equals gain or loss. Sale of AFS. Realized gram per liter equals selling price. Original cost. Any unrealized GL in AOC must be reversed at time security is sold. Dr. Cash. Dr. Unrealized gain on AFS security CR. AFS security CR. Realized gain on AFS security. Investments in equity securities. 1. Preferred stock. No significant influence. Account as trading security. 2. Common stock. No significant influence. Trading security. Less than 20% significant influence. Equity control. Consolidation. Equity classification. Non-public. Measure equity investment at cost less impairment plus minus observable price changes of identical or similar investments from the same issuer. Practicability exception. No readily determinable if fee. Normal. Recognized in NI. Dr. Cash CR. Dividend income. Liquidating dividend. Dr. Cash CR. Investment in investee return of capital is unaffected liquidating when dividend greater than RE. Dr. Cash for full amount of div CR. Dividend income for RE per candidate CR. Investment in company for difference. G for sale of equity security with no gain or loss. Dr. Cash CR. Equity security realized gram per liter equals SP CV at time of sale. G for sale of equity security with a gain. Dr. Cash CR. Equity security CREEK. Gain on equity security. Any valuation account also needs to be removed when security is sold. If ownership percentage is less than 20%, but ability to exercise significant influence. Still use equity method to account for investments. Equity method 1. G to record investment at cost. 2. G to record increase in investment by investor's share of earnings of the investee. 3. G to record decrease in investment by investor's share of cash dividends from the investee. Dr. Investment in investee CREEK. Cash. Dr. Investment in investee CREEK. Equity in earnings investee income. Dr. Cash CR. Investment in investee. Accounting for asset FV differences. Excess of asset FV over BV amortized over life of asset. Investor's share of investees NI decreases. Dr. Equity in investee income CR. Investment in investee. Goodwill. Excess over purchase price over FV of net assets. Non-voting preferred stock. FV method. Don't consolidate when. Legal reorganization, bankruptcy. Non-controlling interest. Portion of the equity of a subsidiary that is not attributable to the parent reported at FE and equity section of consolidated BS separately from parent's equity. Primary beneficiary, VI. Required to consolidate the VI power to direct activities of VI and most significantly impact entity's economic performance. 1. Absorbs expected VI losses. 2. Receives expected VI residual returns. Under US GAAP, all consolidation decisions evaluated first under VI model. If consolidation not required, then investor company determines whether consolidation is necessary under the voting interest model. Business entity exclusions. 1. Non-profits. 2. Employee benefit plans. 3. Registered investment companies. 4. Separate accounts of life insurance policies. 5. Governmental organizations. Business entity is a VI when 1. Insufficient level of equity investment at risk. 2. Inability to make decisions or direct activities. 3. No obligation to absorb entity's expected losses. 4. No right to receive expected residual returns. 5. Disproportionately few voting rights. If one party receives expected residual returns and another party absorbs the expected losses, party that absorbs the expected losses consolidates. Parent company internal. June 1st. G to record acquisition for cash. 2. G to record acquisition for parent common stock. 1. Dr. Investment in subsidiary CREEK. Cash. 2. Dr. Investment in sub-CREEK common stock. CR. EPIC. Acquisition method. 2 distinct accounting characteristics. 1. 100% of NA acquired recorded at FV with any unallocated balance equals goodwill. 2. Sub's entire equity is eliminated. Consolidated workpaper eliminating G. Dr. CS sub EPIC sub RE sub balance sheet adjustments to FV identifiable intangible assets to FV goodwill CREEK non-controlling interest CR investment in sub. Acquisition method. Book value of subsidiary net assets and FV of subsidiary net assets. Difference is FV differences. FV of subsidiary net assets. Difference is goodwill. Business combination costs expenses in an acquisition. 1. Direct out-of-pocket costs. Indirect costs. 2. Stock registration and issuance costs such as SEC filing fees. 1. Debit expense. 2. Direct reduction of value of stock issued. Contingent consideration. Obligation of parent to transfer additional assets or equity interests to former shareholders of sub recorded by parent on acquisition date. 1. Adding estimate of probable settlement cost to investment in sub. 2. Crediting liability of expected value of contingent consideration. Change in contingent consideration. Adjustment after acquisition date included in earnings in the period of adjustment. Expense increase in estimated contingent consideration. CR. Estimated liability for contingent consideration. After acquisition date, parent uses what to account for investment in sub. Cost or equity method for internal accounting purposes only. Consolidated financial statements. Investment in sub account eliminated. Non-controlling interest at acquisition date. FV of subsidiary x non-controlling interest % equals non-controlling interest. Non-controlling interest after acquisition date. Accounted for using equity method beginning NCI plus NCI share of sub NI. NCI share of sub dividends equals ending NCI. IFRS NCI 1. Full goodwill method. 2. Partial goodwill method. 1. FV of sub x non-controlling interest %. 2. FV of sub net identifiable assets x NCI interest %. Non-controlling interest has a blank balance. Credit. FV of subsidiary equals purchase price equals acquisition cost plus NCI at FV. IFRS calculating goodwill. 1. Full goodwill method. 2. Partial goodwill method. 1. Same as GAAP. Goodwill equals FV of subsidiary. FV of sub net assets. 2. Goodwill equals acquisition cost. FV of subsidiaries net assets acquired. Non-controlling interest GAAP. FV of subsidiary x non-controlling interest %. Workpaper eliminating intercompany merchandise transactions. Intercompany sales. Retained earnings. CR. Intercompany COGS Greek. Ending inventory. APCR. AR. 1. Inventory sold to outsiders. 2. Inventory still on hand. 1. Correct COGS. 2. Correct ending inventory. Intercompany bond transactions. One member of consolidated group acquires affiliates debt from outsider. Debt equals retired. GL recognized on the consolidated is bonds payable. Premium. CR. Investment in bonds. Creek. Gain on extinguishment of bonds. Intercompany sale of land elimination. Intercompany gain on sale of land. Creek. Land. Intercompany sale of fixed assets. Consolidating G. Intercompany gain on sale of machine. CR. Machinery. Creek. Accumulated depreciation. Correct depreciation expense. Accumulated depth. CR. Depreciation expense. Subsequent year G to adjust FA to adjust depreciation. RECR. Machinery. Creek. Accumulated depreciation. ADCR. DEP EXP same every year. Intercompany bond transactions rules. Net cash spent or received in acquisition must be reported. Investing section. Statement of cash flows. Payment for acquisition of subsidiary. Net of cash acquired. Consolidated statement of cash flows excludes cash flows between parent and sub. Statement of cash flow. 1. Reconciling NI to net cash providing by operating activities. 2. Financing section. Dividends. 3. Investing section. 1. Total consolidated NI used. 2. Report dividends paid by sub to NCI. Dividends paid by sub to parent not reported. May 3. Report acquisition of additional sub shares by parent if acquisition was an open market purchase. Maintaining goodwill. Internally generated goodwill. Expense as incurred. Goodwill impairment US GAAP. G to record goodwill impairment. Doctor loss due to impairment CR. Goodwill. Goodwill impairment IFRS. Cash generating unit level 1 step test. CV of CGU versus CGU recoverable amount. Recoverable amount equals greater if CGU's FE costs to sell value in use. CV of bond equals cost plus year 1 amortization. Bond purchase date par. Amortized cost stays the same until it matures. A bond G for the investor. Doctor cash doctor discount on BPCR interest revenue. Bond sinking fund. Restricted cash non-current. From trading to any other. FV has already been recognized in income. No adjustment necessary. From any other to trading. FV recognized in current earnings. From HTM to AFS. FV record in OCI. From AFS to HTM. FV amortized GL from OCI with any bond premium discount amortization. Use cost method when investor doesn't have ability to exercise significant control over the investee. Eliminate intercompany transactions income statement. Doctor dividend income from subsidiary CR dividends paid. Estimated post-acquisition restructuring costs. Not booked as a liability on acquisition date, accounted for as incurred. Year-end investment in investee BS. Beginning investment in investee plus investor share of investee's earnings, investor share of investee's dividends, amortization of FE differences. Investor's equity method investment IS. Investor share of investee earnings, amortization of FE differences equals equity in earnings investee income. In advance. Is an intercompany transaction, should not be included in the BS. Gross method, invoice paid within discount period. Purchase discount is credited. Net method, payment made after discount period. Purchase discount lost account debited. Current obligations expected to be refinanced. Non-current debt have to have intent and ability. Dr. Street liability CR, LT liability. Company sells 10,000 bracelet and collects 7% sales tax. Dr. Cash 10,700 CR, sales revenue 10,000 CR, sales tax payable 700. G employer's weekly payroll. Doctor salaries and wages expense CR, FIFO taxes payable CR, withholding taxes payable CR, cash. G employer's tax expense. Doctor payroll tax expense CR, FIFO taxes payable CR, unemployment taxes payable. Exit or disposal activities. Closing location, downsize commitment to exit or disposal plan, footnote only announced with details, liability recognition measured at FE. Asset retirement obligation. Doctor asset retirement cost greater than capitalize increases CV of asset CR. Asset retirement obligation equals FV of ARO obligation associated with retirement of a tangible long-lived asset. ARO subsequent measurement. Doctor accretion expense CR. ARO recorded at PV. Accretion expense growth of liability over time. ARC subsequent measurement. Doctor depreciation EXPCR accumulated depth. Asset retirement obligation total cost. Cumulative accretion expense plus cumulative depreciation expense. All deferred tax liabilities. Non-current. Gain contingencies. Don't record G if highly probably may disclose the contingency in the notes to the FS. Probable or reasonably possible disclose amount and nature remote. Ignore. Loss contingencies. 1. Probable, likely to occur, record. 2. Reasonably possible, more than remote, but less than likely, disclose. 3. Remote, slight chance of occurring, ignore. Loss probable and can be reasonably estimate. Doctor expense CR, liability USC minimum and range, GAAP IFRS, use midpoint and range. Loss is remote, ignore except for 1. Debts of others guaranteed. 2. Obligations of commercial banks under standby letters of credit. 3. Guarantees to repurchase receivable or related property that have been sold or assigned. Total estimated coupon redemptions. Total number of coupons issued x estimated redemption rate. Estimated liability for premium claims outstanding. Total estimated coupon redemptions. Coupons redeemed equals coupons to be redeemed / by number of coupons must be presented equals outstanding premium claims. Estimated liability equals outstanding premium claims x company cost. Doctor premium expense CR, premium liability. Warranty G. Doctor warranty expense CR, warranty liability. Doctor warranty liability CR. Inventory balance in liability account equals total liability, total actual expenditures. PV factor. 1/n. PV equals 1. FVX PV factor 2. FE/N. FV equals 1. PVX FV factor N 2. PVXN. PV of ordinary annuity. Annuity payment X PV or ordinary annuity of 1 for appropriate N and R. PV of annuity due equals PV of ordinary annuity X discounted 1 less period. Find PV factor of ordinary annuity for 1 less period. Then add 1. Multiply this by payment. Usually preferred stock but mandatorily redeemable preferred stock. Equity liability. Imputing interest. Imputing interest not required. No discount. PV not required. Arise in ordinary course of business. Short-term notes paid in property and services. Security deposits. Interest rate determined by government transaction between parent and subs. Discount. Added to NP to determine carrying value to be reported on the BS. Discount has a normal debit balance. Its deferred interest. Imputed interest. No cash payment until maturity. Still accrue for interest. Doctor machine PV. Doctor discount and PCR NP gross amount end of year. Amortized discount. Doctor interest expense CR. Discount on NP increases COVO F year liability. Effective interest method. Borrower maker period payments. Allocate payment between principal and interest. CVX market interest rate equals interest expense. Principal paid equals cash payment. Interest expense new COV equals old COV. Principal paid. Borrowing 1 million cash 100,000 of borrow must be kept in account at bank. Compensating balance. Doctor cash 900,000. Doctor restricted cash 100,000 CR. Notes payable 1 million. Effective yield. Coupon price. Loan must be paid back in full. FE stays the same. Bonds or notes due within 1 year issued as non-current if issuer has intent and ability to refinance with a new issuance of LT debt. Effective interest rate includes all costs charged by the bank including origination fees. LT debt that matures within 1 year. Classified as current liability unless retirement is to be accomplished with other than current assets. Bond issuer holder. Borrower lender. Market rate greater than stated rate less than market rate. Discount. Market rate less than stated rate greater than market rate. Premium. Debentures. Unsecured bonds. Collateral trust bonds. Secured bonds. Convertible bonds. 2 types. 1. Non-detachable warrants. Convertible bond itself must be converted into capital stock. 2. Detachable warrants. Bond not surrendered upon conversion. Only warrants plus cash equals exercise price of warrants. Warrants can be bought and sold separately from the bonds. Zero coupon bonds. Deep discount bonds. No stated interest rate discount redeemed at FE without periodic interest payments still have to accrue for interest quarterly. Bonds recorded as LT liability. At face value adjusted to PV by subtracting unamortized discounts or adding unamortized premiums recorded at true PV at date of issuance based on market interest rate at that date. G. Bonds issued at a discount. Borrower, Dr. Cash, Dr. Discount on BPCR, BP face value investor, Dr. Investment in bonds CR, cash. G. Bonds issued at a premium. Borrower, Dr. Cash CR, premium on BPCR, BP investor, Dr. Investment in bonds CR, cash. Discount. Interest expense greater than interest paid in cash to bond holders. Unamortized amortization of discount. Unrecorded decreases as discount is amortized. Difference between coupon paid and interest expense. Amortization of discount added to CV to determine next period interest expense. CV pulled up towards par over time. Premiums. Unamortized amortization. Bond issuance costs. G. Use effective interest rate for interest expense when bond issuance costs are included in the calculation of the carrying amount of the bond. Still use yield to calculate PV. Deferred bond issuance costs. G. When incurred. Dr. Deferred bond issuance costs. CR. Cash when bond is issued. Dr. Cash for full selling price drive. Discount plus bond issuance costs. CR. Bonds payable face value. CR. Deferred bond issuance costs. Straight line amortization method. Period amortization equals premium discount plus bond issuance cost divided by of periods bond is outstanding constant dollar amount of interest expense each period. Adjust coupon paid to record interest expense. Straight line amortization interest expense equals premium amortization OR plus discount and bond issuance cost amortization. SL amortization G's discount. Borrower, Dr. Bond interest expense. CR. Discount on BP by amortization amount. CR. Cash coupon payment. Investor, Dr. Cash coupon amount. Dr. Investment in bonds amortization amount. CR. Bond interest revenue. Bond interest expense. SL amortization premiums interest expense. G. Borrower, Dr. Bond interest expense. Dr. Premium on BP for amortization amount. CR. Cash coupon payment. Investor, Dr. Cash coupon payment. CR. Investment in bonds amortization amount. CR. Bond interest revenue. Bond interest expense. Effective interest method. Interest expense. CV at beginning of the period X effective interest rate. Effective interest method. 1. Amortization of discount. 2. Amortization of premium. 1. Interest expense. Interest payment. 2. Interest payment. Interest expense. Investor accounting not affected by bond issuance costs. Bonds issued between interest date. Interest accrual added to price based on face coupon rate. Bonds issued between interest date G selling price face 926,395 plus accrued interest equals total cash received 951,395. Dr. Cash 951,395. Dr. Discount 73,605 Cr. BP 1 million Cr. Bond interest expense 25,000. First payment June 30th 1 million x 10% x 6/12. Dr. Bond interest expense 50,000 Cr. Cash 50,000. Year-end bond interest accrual. Dr. Interest expense Cr. Interest payable coupon Cr. Discount on bonds payable. Interest payable on a bond. FVX stated interest rate. Debtor accounts for troubled debt restructuring. Loan restructured in a troubled debt restructuring. Impaired loan. Measurement of impairment, receipt of assets or equity FOR the creditor. Receivable FV asset equity received equals shortfall. Bad debt expense loss. Dr. Bad debt expense Cr. Allowance for credit losses. Measurement of impairment, modification of terms FOR the creditor. Use PV new cash flows at historical interest expense. G to record troubled debt restructuring, transfer of assets. Dr. Notes payable. Dr. Interest payable Cr. Land acquisition cost Cr. Gain on disposal of land. Gain on restructuring creditor. Dr. Land FV. Dr. Allowance for credit losses. Gain on restruct. Cr. Note receivable face value Cr. Interest receivable. G to record troubled debt restructuring, transfer of equity. Debtor. Dr. Notes payable. Dr. Interest payable Cr. Common stock Cr. Apic Creek. Gain on restructuring creditor. Dr. Equity investments FV Drive. Allowance for credit losses Cr. Note receivable Cr. Interest receivable. Modification of terms. Bond extinguishment at maturity. Always pay off face. Dr. Bonds payable Cr. Cash. Gain or loss on bond extinguishment before maturity. Modification of terms gain. Carrying amount total future cash payments. Total accretion expense fastest way. Total estimated cost. Total depreciation. Leasehold improvements. Permanent. Capitalize. Depreciate over lesser of lease life or asset improvement life. Lease bonus. Prepayment for future expenses. Asset. Amortize using SL method over life of lease. Rent kicker. Period expense. Retail stores might pay a percentage of sales over a certain amount. Refundable security deposit. Asset by lessee until refunded by lessor. Non-refundable security deposit. Prepaid asset by lessee until lessor determines it has been earned. Lessor 1. Lease bonus 2. Refundable security deposit 3. Non-refundable security deposit. 1. Unearned income amortized to income over life of lease. 2. Liability until refunded to the lessee. 3. Non-refundable security deposit. Unearned revenue until deposit earned. Lessee must meet just one of the 4 conditions to capitalize. Lease must meet all 3 conditions to be classified by lessor as sales type or direct financing lease. 1. Lessee owns property. 2. Uncertainties don't exist regarding unreimbursable costs. 3. Collectability of lease payments reasonably predictable. Sales type lease. FV greater than CV profit on sale and interest income on the note receivable. Direct financing lease. FV equals CV, no profit, just interest income. Lessee records lease as asset and liability at lower of 1. FV of asset 2. Cost equals PV of minimum lease payments. PV of minimum lease payments. 1. Required payments. 2. Bargain purchase option. 3. Guaranteed residual value exclude executory costs, insurance, maintenance, etc. Include under IFRS. Also exclude optional buyout, depreciable life, ownership transfer and written bargain. Estimated economic life of the asset: 90% FV and 75% life, depreciable life. Use lease term. Lesser gross investment, net investment, unearned interest revenue. 1. Lease payments plus unguaranteed residual value equals gross investment. 2. Gross investment x PV equals net investment. 3. Gross investment net investment equals unearned interest revenue. COGS and sales revenue. Sales type: cost of asset. PV of unguaranteed residual value equals COGS. Sales revenue equals PV of minimum lease payments. Includes PV of guaranteed residual value but doesn't include PV of unguaranteed residual value. Sales type: lease. Cost plus profit equals PV equals selling price equals FV. G to record sales type: lease. Lesser. Doctor lease payments receivable CR, unearned interest income CR, sales revenue. Doctor COGS equals CVCR. Inventory. G to record direct financing lease. Doctor lease payments receivable CR, unearned interest revenue CR. Asset. Direct financing lease PV equals carrying amount of receivable equals cost of asset sold. Under IFRS, initial direct costs at lease inception added to the asset value. Depreciate new base. Residual value not included if going to be paid by a third party. Operating lease excess profit. Sale leaseback rights retained between 10 and 90%. Sale price. Asset PV equals tentative gain. PV of minimum lease payment equals excess gain. Capital lease excess profit. Sale leaseback rights retained between 10 and 90%. Sale price. Asset PV equals tentative gain. Leaseback asset equals excess gain recognized now. All rights retained. PV payments equal to or greater than 90% of FV. Defer all gain and amortize with leased asset. Minor portion of rights retained by seller lessee. Really short term. Recognize all gain. Defer none. Operating lease. Real economic loss. FV less than BV recognize immediately. Artificial loss. SP less than FV, loss deferred and amortized over leaseback period. Artificial loss, minor 10% or less. Recognize immediately. SP less than FV. Derivatives, option contract 2. 1. Buy call option, hope price increases. 2. Buy put option, hope price decreases. Futures contract. Publicly traded, long buy side, profit if prices go up, short sell side, profit if prices go down. Swap. Hope what you receive is greater than what you pay. Forward, futures and swaps. No cost to enter the contract. All derivatives measured at fair value. Derivatives not designated as hedging instrument, speculating. GL income statement. Fair value hedge. GL income statement. Foreign currency net investment hedge. OCI as cumulative translation adjustment. Statement of cash flows. Derivative with no hedging designation. Derivative held for trading purposes. Investing activities operating. FV hedge G. Cash flow hedge G. 1. Record gain on forward contract hedge. Dr. Cash flow hedge CROCI effective portion of hedge. Do this each time there is a gain net settlement of forward contract. Dr. Cash CR cash flow hedge. Record purchase of inventory. Dr. Inventory CR cash. Foreign currency remeasurement. Dysfunctional currently used by the sub. Foreign currency translation. Sub has function currency. Functional currency. Currency of primary economic environment in which entity operates. Local currency or reporting currency. Remeasurement method. Temporal method equals dysfunctional. 1. Balance sheet monetary items. Current year-end rate non-monetary. Historical rate. 2. Income statement non-BS items equals weighted average rate. Balance sheet related items equals historical rate. 3. Remeasurement GL. Plug goes to is. Foreign translation method. Foreign currency equals functional currency. 1. Income statement all is items equals weighted average rate. Transfer NI to RE. 2. BS assets equals current year-end rate. Liabilities equals current year-end rate. Common stock APIC. Historical RE. Roll forward. 3. Translation gain or loss OCI. Translated RE. Beginning translated RE plus translated NI for current period. Translated dividends declared for the current period. Marketable equity securities remeasured using current exchange rate. Permanent differences. Affect current do not affect deferred. Affect only period in which they occur. Interest income on state or municipal bonds. Dividends received deduction. Temporary differences. Deferred taxes. Dr. Tax expense CRO now CRO later liability. Future taxable amounts asset. Total income tax expense or benefit. Current income tax payable or refundable as determined on corporate tax return. Tax return X current tax rate equals current liability plus change in DTA or DTA from beginning to end of reporting period plus deferred liability DTA all multiplied by future tax rate. Investment interest expense. Limited to net taxable investment income. Financial statement income first. Tax return income later. Future tax liability. Installment sales. Contractors accounting equity method. Financial statement expense first. Tax return expense later. Tax deduct later equals future tax benefit. 1. Bad debt expense. 2. Est liability warranty expense. 3. Startup expenses. Tax return income first. FS income later. Tax income first equals prepaid tax benefit. 1. Prepaid rent. 2. Prepaid interest. 3. Prepaid royalties IRC. Prepaid GAAP unearned. Tax return expense first equals FS expense later. Tax deduct first equals future tax liability. 1. Depreciation expense. 2. Amortization of franchise. 3. Prepaid expenses. DTL. Future tax accounting income greater than future financial accounting income. DTA. Future tax accounting income less than future financial accounting income. DTA. Valuation allowance. Dr. DTA total amount. Dr. income tax expense current CR. DTA valuation allowance CR. Income tax benefit deferred amount actually used CR. Income tax payable. G to record reversal of DTA. Dr. income tax expense CR. DTA. G to record a current net operating loss that can be used to obtain a refund of 30,000 taxes previously paid. Operating loss carrybacks. 2. Back no valuation allowance. Dr. tax refund receivable 30,000 CR. Tax benefit 30,000 reduction of the book loss. Operating loss carry forward. 20 years may require a valuation allowance. Dr. DTA-CR. Tax benefit reduces net operating loss of the current period, not a contra expense. Investees undistributed earnings. Income tax return equals report dividend income ownership 0 to 19, 70% exclusion 20 to 80%, 80% exclusion ownership over 80%, 100% exclusion. This is a permanent difference. GAAP report your share of subs income difference between GAAP and income tax return. Temporary difference. When preparing interim FS, income tax expense estimated each quarter using effective tax rate expected to apply to the whole year. Deferred compensation liability. DTA. Rent kicker G. Doctor rent expense CR. Cash period expense lesser. Doctor cash CR. Rental income. No interest payable recorded for non-interest bearing note. Unrealized gain on trading security. Deferred tax liability. To be significant enough to be reported on, segment must be at least 10% of 1. Combined revenues. 2. Operating profits. 3. Identifiable assets. Ending projected benefit obligation equals beginning PBO plus service cost plus interest cost plus prior service cost from current period plan amendments plus actuarial losses incurred in current period, actuarial gains incurred in current period, benefits paid to retirees equals ending PBO. Ending FV of plan assets. Beginning plus contributions plus actual return on plan assets, benefits paid to retirees equals ending FV of plan assets. Pension expense, net periodic pension cost. Expected return on plan assets. Beginning FV of plan assets x expected ROR on plan assets equals expected return on plan assets. Difference between actual and expected return must be recognized in OCI each period and amortized to net periodic pension cost over time with any actuarial gains or losses. Amortization of prior service cost. Beginning unrecognized prior service cost / average remaining service life equals amortization of prior service cost when plan bumped up. Dr. OCICR. Pension liability each year a portion is removed from AOC and added to SRH. Amortization of unrecognized gain or loss corridor approach. Beginning of year unrecognized gram per liter equals excess / average remaining service life equals amortization of unrecognized GL. Amortization of existing net obligation or net asset at implementation. Period to amortize. Use greater of 15 years of average remaining service life PBO FV plan assets equals initial unfunded obligations / 15 years of average employee job life equals minimum amortization. Ending funded status. Beginning funded status plus contributions, service cost, interest cost plus expected return on plan assets, prior service cost incurred in the current period plus net gains incurred during current period, net losses incurred during current period. Prior service costs and pension losses G. In period incurred. Dr. OCICR. Pension benefit asset liability. Amortization of net period pension cost. Dr. net periodic pension cost CR OCI. Pension gain amortization. Recognition in period incurred. Increase funded status of pension plan G. Dr. pension benefit asset liability CR OCI. Dr. OCICR. Net periodic pension cost. G to record contribution to pension plan. Dr. pension benefit liability non-current CR cash. Post-retirement benefits, amortization or expense of transition obligation. 1. Expense full amount ORA PBO less than FV of plan assets greater than equals initial unfunded / by 20 years or average remaining service period greater OF equals minimum amortization. Post-retirement benefit, interest costs and amortization use. APBO, not EBO. Post-retirement benefits attribution period. Beginning employee's date of hire and full eligibility date. Common stockholders' equity and BV per common share. 1. Total stockholders' equity preferred stock outstanding cumulative preferred dividends in arrears equals common stockholders' equity. 2. Common stockholders' equity common shares outstanding. Common shares outstanding. Issued repurchased. Mandatory redeemable preferred stock. Liability issued with a maturity date. APIC examples. Sale of treasury stock at a gain, liquidating dividends, conversion of bonds, small stock dividends. Change in RE. Net income or loss, dividends + prior period adjustments + accounting changes reported retrospectively equals change in RE. G1 appropriation of RE. Dr. RECR, RE appropriated for purpose, no change in RE, reverse when purpose of appropriation has occurred. Treasury stocks has 2 methods of accounting for treasury stock. Retirement of stock. 200 shares of 10 par CS originally sold for 15 and reacquired for 20 are retired. 1. Cost method. 2. Par value method. 1. Dr. Common stock equals 2,000. Dr. APIC equals 1,000. Dr. RE plug CR. Treasury stock. 2. Dr. Common stock 2,000 CR. Treasury stock 200x 10 par equals 2,000. Donated stock received. Dr. donated treasury stock CR. APIC. Donated stock sold. Dr. cash at sales price. Dr. APIC CR. APIC Creek donated treasury stock. If reacquisition price is less than original issue price. Gain credited to APIC. If reacquisition price is more than original issue price. Losses debited to RE. G to record sales of stock subscriptions. Dr. subscriptions receivable CR. Common stock subscribed CR. APIC. Collections of subscriptions. Dr. cash CR. Subscriptions receivable. Issuance of stock previously subscribed. Dr. common stock subscribed CR. Common stock issued. Stock rights. Issuance memo entry only, no G until exercised. When exercised, Dr. Cash CR, CS Creek, APIC. Data dividend is declared. Dr. RECR, dividend payable. Property dividends. Date of declaration, property should be restated to FV and any GL recognized in income. Dr. RE for FMV. Scrip dividends. Dr. RECR, notes payable. Liquidating dividend. Dividends greater than RE excess debited to APIC then to common or preferred stock. Small stock dividend less than 20 to 25% of shares previously outstanding issued. Reduce RE by FMV. Dr. RE FMV Creek, CS at par CR, PIC. Large stock dividend greater than 20 to 25%. 1. Record declaration. 2. Record distribution. Reduce RE by par. 1. Dr. RECR, common stock distributable. 2. Dr. CS distributable CR, capital stock par common. Stock split. Shares outstanding increases, par value decreases. Cost method. Gs 1. Bar back above issue price. 2. Reissue above cost. 3. Reissue below cost. GL upon reissue. 1. Dr. Treasury shares CR. Cash. 2. Dr. Cash CR. Treasury stock CR. APIC TS. 3. Dr. Cash. Dr. APIC TS. But max amount can only absorb from APIC above Dr. RECR. Treasury stock. Bar value method June 1st. Bar back above issue price 2. Bar back below issue 10 par 15 reissue price. Repurchased for 12. 200 shares repurchased 3. Reissued shares 100 shares repurchased for 20 resold for 22. GL calculated immediately upon repurchase 1. Dr. TS Dr. Apex CS Dr. RECR. Cash equals loss X number repurchased. Number 2 RE2. Dr. TS Dr. Apex CS Greek Cash Greek. Apex TS gain 600 equals 3x 200 equals 600 gain 3. Dr. Cash CR. TS Greek. Apex CS. No GL. Sale leaseback major 90% or more 1. Gain 2. Loss 3. Artificial losses. 1. Defer all 2. Recognize immediately 3. Defer all. Sale leaseback middle 10 to 90% 1. Gain 2. Loss 3. Artificial losses. 1. Defer up to PV of leaseback 2. Recognize immediately 3. Defer all. Sale leaseback minor 10% or less. Operating 1. Gain 2. Loss 3. Artificial losses. 1. No deferral 2. Recognize immediately 3. Recognize immediately. Cost of stock rights. FMV of rights/X cost of stock. Non-compensatory stock options. No G until employee buys stock. Compensatory stock options. Valued at FIFO options issued. G stock options 1. Grant date 2. Allocate compensation cost to operation 3. Record exercise of options 4. Expiration of options. 1. No entry 2. Dr. compensation expense CR. Apex stock options 3. Dr. cash Dr. Apex stock options reverse total to this point CR. Common stock CR. Apex 4. Dr. Apex stock options CR. Apex expired stock options. Stock appreciation rights. Underfunded pension plans reported as current liability. Expected benefits payable next 12 months. FIFO plan assets. If unrecognized balance of gain/loss less than 10% corridor. No amortization. Service cost G. Dr. compensation expense CR. Pension benefit asset. If revenue to a single customer 10% or more of total revenue, must disclose that fact. Basic EPS. Income available to common shareholders/weighted average number of common shares outstanding. Preferred dividends to deduct to arrive at NI available to common stockholders. 1. Non-cumulative preferred stock dividends declared in the period. 2. Cumulative preferred stock dividends accumulated in the period regardless of whether they have been declared. Weighted average of common shares outstanding. Shares outstanding beginning of period plus shares sold during period. Shares reacquired plus stock dividends and splits. Reverse stock splits. Diluted EPS. Income available to common stockholder plus interest on dilutive security/weighted average number of common shares. Options and warrants. Treasury method only dilutive if average price greater than strike price. Options and warrants additional shares outstanding. Number of shares/average market price. If diluted EPS greater than basic EPS. Anti-dilutive exclude. Convertible preferred stock. Add preferred stock dividends back to NI numerator. Contingent shares that are dilutive. Also included in calculation of basic EPS and as of the date all conditions for issuance are met. Direct method cash received from customers. Revenues increase in receivable plus decrease in receivables plus increase in unearned revenue decrease in unearned revenue. Direct method cash paid to suppliers. COGS plus increase in inventory decrease in inventory increase in AP plus decrease in AP. Direct method, cash paid to employees. Salaries and wages expense, increase in wages payable plus decrease in wages payable. Amortization of bond premium. Subtract from NI for indirect method. Non-cash investing and financing activities. 1. Purchase of fixed assets, issuance of stock. 2. Conversion bonds to equity. 3. Acquiring assets through capital lease obligation. 4. Exchange of one non-cash asset for another. Increase in allowance for doubtful accounts. Operating inflow and internal board designated funds. Net assets without donor restrictions. Not-for-profits required to produce which FS? 1. Statement of financial position. 2. Statement of activities. 3. Statement of cash flows. US GAAP versus IFRS interest received. 1. CFO. 2. CFO or CFI. US GAAP versus IFRS interest paid. 1. CFO. 2. CFO or CFF. US GAAP versus IFRS dividends received. 1. CFO. 2. CFO or CFI. US GAAP versus IFRS dividends paid. 1. CFF. 2. CFO or CFF. US GAAP versus IFRS taxes paid. 1. CFO. 2. CFO, CFI, CFF. CFF not-for-profit includes proceeds from donor restricted contributions, unrestricted investing activity. Revenues from exchange transactions classified as increases to net assets without donor restrictions. Conditional promises. Earned equals revenue, good faith deposits, doctor cash, CR, refundable advance. Promises to give, unconditional promises. Pledge equals revenue drive, asset, CR, contribution support revenue. Contributions of services that don't enhance non-financial assets recognized. Someone, specialized skills required and possessed by donor. 2. Otherwise needed by organization. 3. Measurable. 4. Easily. G. To record contributed services that meet criteria for recognition. Doctor, expense or asset. CR, contributions without donor restrictions. Donated materials. G. If significant in amount. Doctor asset. CR, contribution, support. Donated materials that pass through organization to ultimate beneficiary. No recorded unless substantial. If substantial, doctor expense. CR, contributions, supplies. Gifts in kind. Non-cash contributions such as donated investments, revenue at FV. Unconditional promise, if expected to be collected or paid in less than 1 year. Assets without donor restrictions. Doctor cash without donor restriction. CR, satisfaction of time restriction without donor restriction. Increases to net assets without donor restrictions. Doctor pledge receivable with donor restrictions. CR, allowance for doubtful accounts. CR, donor restricted support. After receivable collected and money spent on restricted purpose. Amounts recognized as contributions received through fundraising acquisition and total contribution received. FV of premiums equals contribution revenue. Gross revenue from tuition and fees. Assessed student tuition and fees, cancelled classes equals gross revenue. Deductions from patient service revenue, net patient service revenue. 1. Contractual adjustments. 4. Third-party payments. 2. Policy discounts. 3. Administrative adjustments. 4. Bad debts. Services billed prior to firm's assessment of patient's ability to pay. Patient service revenue equals gross patient service revenue. Charitable services. Patient service revenue. Transactions. Medical services, doctors, surgery, recovery room and board. Other operating revenue. Tuition from schools. Revenue from educational programs. Donated supplies and equipment. Specific purpose grants. Revenue from activities. Cafeteria revenue. Parking fees. Gift shop revenue. Medical transcription fees. Non-operating revenue and support gains and losses. Interest and dividend income from investment activities. Gifts and bequests. Grants. Income from endowment funds. Income from board-designated funds. Donated services. Conditional promises. Not included in Rev. Do not record. G. Not financially interrelated. No variance power. Doctor asset. CR. Refundable advance liability at FE of the asset. Not financially interrelated with variance power. NFP is agent drive asset. CR contribution. Organization financially interrelated with a beneficiary that accepts assets from a resource provided with or without variance power. Doctor asset. CR contribution at FE. Beneficiary. No financial or beneficial interests. Doctor receivable. CR contribution. Not financially interrelated beneficial interest. Doctor beneficial interest. CR contribution. Beneficiary financially interrelated interest in net assets of the recipient. Doctor interest in recipient net assets. CR change in interest in recipient net assets. Underwater endowments must disclose how hard it will be for intended beneficiaries to be FAD. 1. FV of underwater endowment. 2. Endowment gift original amount free deficiency. Under both fair value and equity method, liquidating dividends. Reduce carrying amount of investment account. Characteristics in financial reporting for government. 1. Understandability. 2. Reliability. 3. Relevance. Make a difference. 4. Timeliness. 5. Consistency. 6. Comparability. 3 themes. Governmental accounting different from commercial and NFP. 1. Fund structure. 2. Fund accounting. 3. External reporting. Fund. Sum of money or other resource segregated for purpose of carrying on a specific activity or attaining certain objectives. Fund types classified into 1. Governmental funds. 2. Proprietary funds. 3. Fiduciary funds. Primary user groups. External reporting. Governmental. 1. Citizens. 2. Legislative oversight groups. 3. Investors. Creditors. Governmental funds accounting for using 1. Modified accrual basis of accounting. 2. Current financial resources measurement focus. Governmental fund types. GRASPP. 1. General. 2. Special revenue funds. 3. Debt service funds. 4. Capital projects funds. 5. Permanent fund. Governmental funds balance sheet. Current assets plus deferred outflows. Current liabilities plus deferred inflows of resources plus fund balance equals total current liabilities, deferred inflows of resources, and fund balances. Governmental funds statement of revenues, expenditures, and changes in fund balance. Revenues, expenditures uses equals net change in fund balance. Proprietary funds accounting. 1. Full accrual basis. 2. Economic resources measurement focus. Proprietary fund types. 1. Internal service funds. 2. Enterprise funds. Proprietary fund statement of net position. All assets plus deferred outflows. All liabilities plus deferred inflows equals net position. Proprietary funds, statement of revenues, expenses and changes in fund net position. Operating revenue, operating expenses plus non-operating revenue equals change in net position. Fiduciary funds accounting. 1. Full accrual basis. 2. Economic resources measurement focus. Fiduciary fund types. 1. Pension trust funds. 2. Agency trust funds. 3. Private purpose trust funds. 4. Investment trust funds. Statement of fiduciary net position. All assets plus deferred outflows equals net position. Statement of changes in fiduciary net position. Additions equals change in net position. Modified accrual. 1. Revenue recognized. 1. 2. Expenditures recorded. 1. When measurable and available to finance expenditures of current period during year, pay liabilities 60 days after year 2 related fund liability is incurred. Full accrual. 1. Revenue recognized. 2. Expenses recognized. 1. When earned. 2. When incurred. Differences in accounting for modified accrual basis current financial resources measurement and full accrual basis economic resources. 1. Budgetary control spending. 2. Activity flow of current financial resources. 3. Encumbrance record purchase orders aid in control of spending. Budgetary accounting beginning of year G. Estimated revenues, appropriations drive, estimated revenue control. Dr. Budgetary control. CR, appropriations control. CR, budgetary control. Budgetary accounting end of year G. Budget reversed and closed, always same amounts as original G plus / any amendments. Dr. Appropriations. Dr. Budgetary control. CR, estimated revenue control. CR, budgetary control. Governmental funds, receivables recognized. If government has enforceable legal claim, recognized revenue adjusted to amount available through allowance account or deferred inflows of resources account. Property tax. Gs. 1. Accrual. 2. Collection. 3. Reclassify receivables to delinquent. 4. G. To reclassify current allowance for uncollectible to delinquent and adjust revenues to accrue available amounts. Types of non-exchange revenues. 1. Derived tax, taxes from exchange trends, sales taxes, income taxes. 2. Imposed non-exchange, fines, property taxes. 3. Government-mandated non-exchange transactions, environmental cleanup. 4. Voluntary non-exchange transactions, grant agreements. Revenue recognition requirements. 1. Time requirements. 2. Eligibility requirements. 1. Applicable to all non-exchange revenues. Derived and imposed tax revenues only subject to time requirements. Who is subject to eligibility requirements? Only government-mandated and voluntary non-exchange. Who is subject to contingency requirements? Voluntary non-exchange transactions. Revenue unbilled recorded. Imposed non-exchange revenues, real estate taxes, fines and penalties. Revenue unreceived. Derived tax revenue, income and sales taxes. Revenue unearned. Unearned revenue collected in advance, real estate taxes paid in advance, restricted grants, deferred inflows. Expenditure recognition, purchase method. Gs. 1. Buying item. 2. Use of item. 3. On hand at E. 1. Doctor expenditure. CR. Vouchers payable. 2. No entry. 3. Doctor supplies inventory. CR. Non-spendable fund balance inventory. Expenditure recognition, consumption method. Gs. 1. Buying item. 2. Use of item. 3. On hand at E. 1. Doctor supplies inventory. CR. Vouchers payable. 2. Doctor expenditure. CR. Supplies inventory. 3. No entry. Governmental funds fixed assets purchases G. Expenditure not capitalized depreciated doctor expenditure capital LACR vouchers payable. Governmental funds LT debts proceeds from bond issuance. Doctor cash CR other financing sources bonds issued. Governmental funds government pays principal and interest on LT debt G debt service payments. Doctor expenditure principal doctor expenditure interest CR cash. Issued a purchase order for supplies. Doctor encumbrance CR budgetary control. To record unused POs and actual activity. Doctor unassigned fund balance CR committed fund balance. Interfund transfers. Not revenue other financing sources and uses non-reciprocal interfund activity. Intergovernmental revenues. Are revenue. Encumbrance Gs 1. Set up 2. Invoice received actual cost 3. Close budgetary accounts related to outstanding 4. Record receipt of last year's item and pay for it. Unexpended appropriations. Appropriations plus expenditures plus encumbrances. Extraordinary items versus special items. 1. Must be both unusual and infrequent. 2. Must only be unusual or infrequent but not both. Deferred outflows of resources. Positive effect on net position reported following assets but before liabilities. Deferred inflows of resources. Negative effect on net position reported following liabilities but before equity. Outflow inflow refunding of debt. Acquisition price net carrying amount of debt deferred outflow loss deferred inflow gain component of interest expense over remaining life of old or new debt whichever is shorter. G to record decline in value of hedge for government. Doctor deferred outflows or resources CR forward contract. Reciprocal interfund activity. 1. Interfund loans. 2. Interfund services provided and used. Non-reciprocal interfund activity. Non-exchange transactions. 1. Interfund transfers. 2. Interfund reimbursements. Categories of fund balance. Net position, government-wide and proprietary fund categories. Monitoring equals non-monitoring equals. 1. Special Revenue Fund. 2. Agency Trust Fund. Debt Service Funds encumbrances. Not applicable fund balance entirely restricted for debt service. G. Interfund transfer from the general fund. Doctor cash CR interfund transfers. Debt service fund income from investment of resources. Doctor cash CR revenue investment income. Debt service fund journalizing interest expenditures principal expenditures. Doctor expenditures CR cash record when legally due principal same entry. Debt service closing entry for activity at E. Closed for actual amount. Doctor interfund transfers capital projects fund. Doctor interfund transfers special revenue fund drive other revenue CR fund balance restricted for debt service CR expenditures interest CR expenditures principal. Debt service composition of fund balance. Beginning restricted fund balance plus revenue expenditures subtotal plus interfund transfers equals ending restricted fund balance. G to record unrestricted government grant. Doctor cash CR revenue. G to record restricted government grants. Doctor cash CR revenue collected in advance. G to recognize revenue restricted when spent by a cost reimbursement contract. Doctor expenditure CR, vouchers payable cash and doctor revenue collected in advance CR, revenue. Special assessments, government primarily or potentially liable for special assessment debt. Account for capital project and debt-related transactions through governmental or proprietary fund. Special assessments, governmental unit not primarily or potentially liable. Agency fund. Capital projects fund G bond proceeds with a premium. 1. Record proceeds doctor cash CR. Other financing sources bond issue proceeds CR. Other financing sources premium on bonds 2. Transfer bond premium to debt service fund doctor interfund transfer CR cash. If bonds sold at discount. Project reduced by amount of discount or funding shortfall transferred in from another source. Interest revenue capital projects fund. Transferred to debt service fund. G amount to report fixed assets government-wide financials 1. Purchase 2. Construction 3. Capital lease 4. Donated 5. Forfeiture. 1. Cost to buy 2. Cost to construct 3. PV lease payments 4. FMV 5. Lower of cost to acquire or market. Assets financed by capital leases in governmental funds. Doctor expenditures CR. Other financing sources. Capital projects G to close budget. Doctor appropriations CR. Estimated other financing sources. Capital project outstanding encumbrance at year-end. Carried forward as component of fund balance. Capital restricted fund balance. Beginning fund balance restricted plus proceeds from bond issue plus interest income expenditures into fund transfer to debt service equals ending fund balance restricted. Permanent funds 1. Definition 2. Revenue sources 3. Expenditures. 1. Used to report resources legally restricted to extent that only earnings and not principal may be used for reporting government programs 2. Investment earnings from trust 3. Related to operating purpose of the fund. Permanent funds encumbrances. Not applicable. Where public restricted funds are recorded 1. Special revenue fund 2. Permanent fund. 1. Principal and interest available for public spending 2. Just interest. Debt service fund revenue. Allocated portions of property taxes and transfers from other funds. Capital projects other financing sources. Bond proceeds used to fund project general fund or special revenue fund interfund transfers special assessments. Capital Projects Fund G to record short-term borrowing 1. TOB refinance with LT debt 2. To be repaid with revenue. 1. Doctor Cash CR. Other financing sources debt proceeds 2. Doctor Cash CR tax or revenue anticipation note payable. Capital Projects Fund revenues. Investment earnings tax revenues levied specifically to fund capital improvement capital grants. Property taxes collected in advance. Doctor Cash CR deferred inflows of resources. Charges made by an internal service fund. Reciprocal accounted for as revenue in financials. Non-reciprocal reimbursements. Eliminated. Government-wide FS transfers. Eliminated. Admission of a partner by purchase or sale of existing partnership interest. No journal entry AL and total capital of partnership don't change. Partner's capital account equals fair value of contributed assets PV of liabilities assumed. Creation of a new partnership interest with investment of additional capital. 1. Exact 2. Bonus 3. Goodwill. Exact method. Purchase price equals book value of capital account purchased. No goodwill or bonus. Add capital accounts together for total. Say 25% ownership. 1/4 equals 4 minus 1 equals 3 total / 3 equals amount to pay for 25% interest. Old total plus new contributed amount equals total new equity. Bonus method. Recognize intercapital transfer. 1. Credit to existing partner. New partner pays more than NBV. 2. Credit to new partner equals new partner pays less than NBV. Balance in total capital accounts controls capital account allocation. Bonus to existing partners. Bonus to new partners. New partner pays less than new contribution. Same as before, except debit old partners accounts for what they give up. Goodwill method. Profit and loss distribution. All payments for interest on capital, salaries and bonuses are deducted prior to any distribution in the profit and loss ratio. Withdrawal of a partner. 1. Bonus method. 2. Goodwill. Withdrawal, bonus method. Withdrawal, goodwill method. Partnership liquidation. Poor partners. No money to repay shortage. Rich partners paid first. First, all non-cash assets are converted to cash. All liabilities are paid and remainder is distributed to partners. Gain or loss on realization. Creditors paid first. Partners capital paid less cash paid equals partners balances. Capital deficiency. Debit balance in partner's capital account and shows partnership has claim against partner for amount of deficiency. Right of offset. If partner with capital deficiency has a loan account, partnership has legal right to offset and may use loan to satisfy capital deficiency. Internal service funds. Finance and account for services and supplies provided exclusively to other departments within a government unit or to other government units, typically on a cost reimbursement basis. Internal Service Fund. Operating revenues. G to record billings for services rendered to other funds. Recognized when earned. Dr. Cash CR. Billings to other departments. Internal Service Fund. 1. Record interfund transfer. 2. Record contribution of assets to a new internal service fund from the general fund. 3. Sale of general obligation bonds or capital leases. 4. LT advances from other funds to be repaid from the earnings to the service fund. 1. Dr. Cash CR. Interfund transfer. 2. Dr. Capital Assets CR. Contribution. 3. Dr. Cash CR. LT bond payable. 4. Dr. Cash CR. Due to other fund. Proprietary funds. Fund balance or net position for equity. Net position. 1. Net investment in capital assets. 2. Restricted for debt services. 3. Unrestricted. Order of presentation of line items on a proprietary fund. Statement of revenues, expenses and changes in fund net position in cassette. 1. Income. 2. Non-operating income and expense. 3. Capital contributions. 4. Additions to endowments. 5. Special items. 6. Extraordinary items. 7. Transfers. Establishing enterprise fund. G to record capital contributions. Dr. Capital Assets CR. Capital contributions. Limited or capital lease enterprise fund. Backed by proprietary fund or paid with revenues. Dr. Cash CR. LT bonds payable. Enterprise fund used to account for provision of goods and services financed mainly by user charges. Lottery counts. Statement of cash flows. 1. Proprietary funds. 2. Fiduciary funds. 1. Yes. 2. No, not required. Fiduciary funds. Pension trust. G to record receipt of money from other funds. Additions. Not revenue nor other financing sources. Dr. Cash CR. Additions. Employer contribution. Restricted. Other fund transferring money to the pension fund. Doctor expenses CR cash full accrual expenses not transfers. Net pension liability. NPL equals total pension liability amount of pension plan's fiduciary net position. Pension transactions accounted for as deferred outflows and inflows in governmental entities. Similar to OCI, actuarial gains and losses, actual earnings different from projections, certain costs of plan amendments. Statement of fiduciary net position 1. Asset valuation 2. Liabilities and net position. 1. Fair value 2. Liabilities subtracted from total assets equals fiduciary net position restricted from pension liability reported on notes. Statement of changes in fiduciary net position 1. Additions 2. Deductions. 1. Contributions, investment earnings, premiums and discounts on debt securities not amortized as investment income. 2. Benefits, refunds of contributions, administrative expenses. Agency Fund 1. Examples 2. Is revenues and expenses. 1. Tax collection funds, clearance funds, special assessments. 2. Not recognized, no is. Fees collected by agency fund. Liability. Tax collection fund G to record county collections and retaining of a fees %. Dr. Cash CR due to other unit CR due to county general fund. Agency trust fund, clearance funds. Cash conduit arrangements, no monitoring, pass-through grants, traffic citations, alimony, child support, court-ordered payments. If governmental unit has monitoring, determines eligibility. Special revenue fund is used. Statement of fiduciary net position, agency fund. Current assets equals current liabilities, no fund balance. Private purpose trust, revenue. Income from principal of private purpose may be placed with another fund. 1. Doctor due from private purpose trust CR, interfund transfer from private purpose trust. 2. Doctor cash CR due from private purpose trust. 3. Doctor interfund transfer to capital projects fund CR due to capital projects fund. 4. Doctor due to capital projects fund CR, cash. Private purpose, capital gains losses. Recorded as adjustments to income expense. Correct fund to account for restricted funds. 1. Public use, spending, interest and principal. 2. Public use, interest only. 3. Private use, interest and or principal. 1. Special revenue. 2. Permanent. 3. Private purpose. Investment trust fund. Governmental entity sponsors one or more external investment pools. External portion of each pool separate investment trust fund. D. Statement of fiduciary net position, investment trust funds. Assets, liabilities, net position held in investment trust. 2. Governmental funds that don't use encumbrances. 1. Debt service. 2. Permanent. 1. Debt service transactions of a special assessment issue for which government not obligated. 2. Government is obligated. 1. Agency fund. 2. Debt service fund. General fund bears cost of funding. Pension plan. Government-wide FS. 1. Statement of net position. 2. Statement of activities. Government-wide FS focus on fund accounting. Focus on operational accountability, fiscal accountability. Special purpose local government, primary government entity. If hospital authority or school district governmental unit has single or special purpose separated elected governing body, legally separate, fiscally independent of other state and local governments. Discrete presentation used. Criteria for blended presentation not met. Display component units in separate columns. Blended method used when any of these conditions met. 1. Board of component unit substantively same as primary. 2. Component unit serves primary exclusively or almost exclusively. 3. Component unit isn't a separate legal entity. Criteria for classification and presentation of a private not-for-profit organization as a discrete component unit of a primary government. Benefit. Private org must be for the near-exclusive benefit of the primary government. Access. Primary government must have access to private NFP resources. Significance. Resources of private NFP must be significant to primary government. Legally separate. Primary government. Enterprise funds. Business type activities. Government-wide basic FS. Government-wide FS, Fund FS, Notes. MD&A. Required supplementary information. Government-wide net position. Assets plus deferred outflows of resources, liabilities plus deferred inflows equals net position. Governmental capitalization of construction period interest. Not allowed for capital assets included in governmental activities column. GRASPP plus internal service enterprise funds is required. Eligible infrastructure assets change from required approach to modified approach equals change in accounting estimate. Can elect not to capitalize artwork and historical treasures when 1. Collection held for public exhibition. 2. Collection is protected. 3. Proceeds from sale of collected items used to acquire other items for collection. Same rule as NFP. Governmental statement of activities. Program approach nets expense or revenues for each function or program. Program revenue category types. 1. Charges for services. Exchange transactions includes fines and forfeitures. 2. Operating grants and contributions. 3. Capital grants and contributions. Capital assets donated to a governmental unit recorded at estimated FE when received. Other property lower of cost or market. Modified approach infrastructure expenditures. Reported as expenses except outlays that result in additions or improvements capitalized. Government-wide FS eliminations. 1. Interfund services, water and utilities. 2. Internal activity associated with blended component units. 3. Internal activity associated with discretely presented component units. 1. Do not eliminate. 2. Reclassified as interfund activity. 3. Reported as external transactions. Government-wide. 1. Interfund receivables and payables. 2. Receivables and payables to fiduciary funds. 1. Eliminated except for net residual balances of amounts due and payable between government and business type activities. 2. Treated like assets and liabilities derived from external sources. Determining whether a fund qualifies as a major fund. Remember 1. Aggregate fund balance equity not used in either test. 2. General fund will always be a major fund. 3. Internal service funds not used in the evaluation. Major fund treatment. Fund financial statements. Fund needs to be both 10% of its fund categories assets, revenues, EXPD expenses, and 5% of combined governmental and enterprise assets, revenues, expenditures, expenses. Proprietary fund statement of cash flows, reconciliation to net cash provided by operations. Operating income not net income includes depreciation and changes in current assets and liabilities but doesn't include adjustments for GL. Proprietary state of cash flows, interest income cash receipts. Investing activities. Proprietary SOCF, interest expense cash payments. Either capital and related financing non-capital financing. Proprietary SOCF, capital asset purchases. financing activity not investing. Proprietary SOCF 1. Operating activities 2. Non-capital financing activities 3. Capital financing activities 4. Investing activities. Revolving debt financing. Excluded from reconciliation for proprietary SOCF. Governmental funds BS to government-wide reconciliation adjustments. Total governmental fund balance plus capital assets, accumulated depreciation, non-current liabilities, deferred inflows for recognized revenues, accrued interest payable plus internal service fund net position equals net position from governmental activities. Reconciliation of governmental fund statement of revenues, expenditures, and changes in fund balance to government-wide statement of activities. CPA writes net change in fund balance, gov funds plus capital outlay, expenditures plus principal payments of non-current debt, asset disposals, sources plus revenue, interest expense, depreciation expense plus internal service fund net revenue equals change in net position of governmental activities. Basis of accounting entries 1. To recognize misvariable but unavailable tax revenue 2. To accrue interest expense 3. To record current period depreciation. 1. Doctor deferred inflows CR. Tax revenue 2. Doctor interest expense CR. Accrued interest payable 3. Doctor depreciation expense CR. AD. To integrate internal service fund assets and liabilities and eliminate internal service fund profits. Doctor assets, governmental activities, Doctor internal service fund revenue CR, liabilities, governmental activities CR, internal service fund expenses CR, governmental fund expenditures. To eliminate interfund accounts for government-wide FS. Doctor interfund transfers in CR, interfund transfers out, Doctor due to other funds CR, due from other funds. Included in MD and A. 1. Description of the FS 2. Identity of primary government and discrete component units 3. Economic conditions and outlook 4. Major initiatives. Required supplementary information. 1. Budgetary comparison reporting 2. Infrastructure reporting 3. Pension info. Budgetary comparison reporting must be prepared for general fund and each major special revenue fund that has legally adopted annual budgets. Budgetary comparison reporting optional. 1. Variances between budget and actual. 2. Differences between the original and the final amended budget. Import costs. Inventoriable. Cash and cash equivalents found in. Summary of significant accounting policies. Entire warranty liability accrued in the year of sale. Bonds with bond issuance costs. Reduce net carrying value of the bond. BV common share. Common SE common shares outstanding. Common stockholders' equity. Total stockholders' equity, preferred stocking outstanding, cumulative preferred dividends in arrears. NFP value of services recognized when. Must meet all 3 criteria. 1. Specialized skill. 2. Otherwise needed. 3. Measured easily. Interim FS should show period ending end of preceding fiscal year and end of the most recent fiscal quarter. Dollar value LIFO. CY cost index equals base greater than layer X index equals result to increase to next base number, subtract previous base, and this is your layer. Add up all results to get to the year it's asking for. Intercompany transactions depreciation expense. Overstated by a certain amount of intercompany gain. Gains losses on foreign exchange transactions. Income from continuing operations. Reconciliation of governmental fund FS to government-wide found in. Basic FS. If likelihood of a loss is probable but loss can be reasonably estimated. No accrual. Debt of others guaranteed. Must be disclosed in the FS. Capital lease. Lessee depreciates asset if lessee takes ownership or bargain purchase option. Depreciate over economic life. Foreign currency hedge. Net investment hedge. Included in OCI as cumulative translation adjustment. Translation remeasurement. Restated FS denominated in functional currency to the reporting currency from foreign currency to entity's functional currency. Operating lease. Lesser income from leased asset. Total monthly rentals plus lease bonus amortization depreciation. Operating lease. Lessee expense for leased asset for the year. Monthly rentals plus lease bonus amortization. Minimum lease payments. 1. Include 2. Exclude 1. Payments, bargain purchase option, guaranteed residual value. 2. Executory costs and optional purchases. Operating lease, leasehold improvements. Capitalize and amortize over the lesser of remaining life of the lease or asset improvement life. Rental payment. Capital lease annuity due. Doctor obligation under capital lease. Drive tax expense. CR cash. Under IFRS initial direct cost. Added to finance lease at lease inception. If residual value will be paid by a third party. Don't include in PV calculation. Deferred revenue. Sale leaseback. Unearned profit. IFRS sales leaseback if operating lease and SP equals FE. Any profit or loss is recognized immediately. Modified cash basis. Capitalizing inventory. Contingent contribution. No entry required. Unconditional promise to give. Doctor asset. CR contribution support revenue. Good faith deposits. Doctor cash. CR refundable advance. Multi-year pledges. NPV now equals revenue future equals donor restricted support. Donated services. Contribution at FE drive expense or asset. CR contributions without donor restrictions. Donated materials. Revenue at FE drive asset Creek contribution support. Unconditional pledge. Recognized as contribution revenue in the year the pledge is received. Resource provider greater than recipient greater than beneficiary. Transfers of assets. 1. Not financially interrelated without variance power. 2. No financial interrelationship with variance power. 3. Financially related with or without variance. 1. Recipient liability to beneficiary at FE drive asset Creek refundable advance liability. 2. FE contribution when received by recipient expensed when distributed to beneficiary. Doctor asset. CR contribution. 3. Doctor asset. CR contribution. Beneficiary recognizes right. Unless variance power. Drive revenue. CR contribution. Completed contracts. Final Gs. 1. Doctor progress billing. CR revenue. 2. Doctor construction expense. CR CIP. To recognize revenue each period. % of completion. Doctor construction expense. Doctor CIP. CR revenue. Example of G to increase cash. Doctor cash. CR EFT Greek interest revenue. Buildings deferred maintenance. Include extraordinary repairs. 1. Increased life. 2. Increase utility. 1. Reduce accumulated depreciation. 2. Capitalized to fixed assets. LIFO and IFRS. Permits use. Capitalized computer software amortization annual expense is A. Greater of 1% of revenue total capitalized amount x current gross revenue total projected gross revenue 2 straight line. Partnership withdrawal 2 methods. 1. Bonus method. Increase individual partners' accounts without changing total net assets of the partnership. 2. Goodwill. Increases individual partners' accounts and changes total net assets of the partnership. Acquisition with a gain. 1. Parent acquired sub at a discount. 2. Parent paid less than FV. 3. This is a negative balance. BS adjusted to FV identifiable intangibles. FV gain. Eliminate all intercompany payables and receivables. Elimination intercompany merchandise transactions. Doctor intercompany sales. Doctor RECR intercompany COGS Greek ending inventory intercompany profit inventory remaining. Beginning inventory plus purchases equals COGS ending inventory equals COGS. See what percentage ending inventory and COGS is if COGS intercompany profit. COGS equals profit x at percentage intercompany profit ending inventory equals profit x other percentage. Intercompany bond transaction. Considered retired. GL recognized on consolidated is Dr. bonds payable. Dr. premium CR investment in parent bonds. CR gain on extinguishment of bonds. Intercompany sale of land. Intercompany GL on the sale of land remains unrealized until land is sold to an outside. Elimination in period of sale. Adjust land to original cost. Eliminate gain. Dr. intercompany gain on sale of land. Greek land. Intercompany profit on sale of depreciable fixed assets subsequent years. Rent kicker. Specific events period expense. Refundable security deposit 1 lessee 2 lesser. 1 asset until refunded by lessor. 2 liability until refunded to lessee. Non-refundable security deposit 1 lessee 2 lesser. 1 reported as asset by lessee until lessor determines it has been earned. 2 unearned revenue. Deferred lease expense. Total lease payments per year. Lease expense. Taxes and lease payments. Take them out. Software product capitalized costs when detailed program design done. Technological feasibility has been attained. Increase in rent receivable. Deferred tax liability. Open purchase order. Committed. Grant revenues recognized as revenues in the year the monies are used. Remaining available appropriations. Appropriations, expenditures, encumbrances. Debt service funds accounts for accumulation of resources for and the payment of general long-term debt principal and interest. Transportation to consignees. Added and included in calculation of COGS. Installment sales method. Gross profit recognized. Cash received in that year x gross profit percentage. Internal service funds typically on a cost reimbursement basis. Reduction of pension liability government-wide FS. Deferred inflow. Not a separate legal entity. Component unit blended presentation. Deferred revenue modified accrual. Portion of ending receivable miserable but not available ending receivable collections 60-day rule ending allowance for doubtful accounts. Which portion of monthly lease payments financing outflow? Only principal portion. Intrinsic value of stock options. Market price exercise price x number of shares. Company large accelerated filer must file form after how many days of the period? 40. Costs incurred developing goodwill. Expensed. IFRS change in decommissioning liability. Recognized in profit or loss. Useful life of an intangible. Period over which asset expected to contribute to future cash flows. Is cheap property held for a short period of time for another governmental entity? Asset in an agency fund offset by liability. IFRS inventory write-down. Lower of cost or NRV not market. Interest in a variable interest entity. The entity is required to consolidate. Not eligible for FI valuation. Bonus compensation equation. Equals percentage.